Never pay your rent from your business bank account. Yet, most solopreneurs are doing exactly that, and it's making the business a lot more complicated. Hi, I'm Kyle from Collective, the formation, tax, and accounting solution for self-employed people. Let's talk about how to pay yourself as a business owner. If you're running a business, whether you're a sole proprietor or an LLC owner, figuring out how to actually pay yourself can feel like you're trying to solve a puzzle with missing pieces. Now, let me ask, do you just take money out of your bank account? Do you ever just write yourself a paycheck? Is it different if you're an LLC or an S Corp? In this video, we're gonna be breaking down exactly how to pay yourself as a business owner, depending on your specific business structure. And we're gonna keep it simple, clear, and super real. No fancy words and no fluff. Just the stuff that you actually need to know. And trust me, getting this right isn't just about taxes. It's about protecting your business, your bank account, and your peace of mind. Stick around, because later in this video, I'm gonna share the one mistake that quietly destroys small business finances and how to avoid it. All right, let's clear something up right away. Your business bank account should definitely not be your personal piggy bank. But honestly, a lot of us start out treating it like it is. You land a client, they pay you, it hits your business bank account, and boom, you Venmo your landlord to pay rent and you're done. But here's the problem. That makes your life and your taxes a lot messier. Now, the way that you pay yourself completely depends on how your business is structured. Now let's walk through each type of business and how paying yourself from each business type works. Now, if you're a sole proprietor, meaning you haven't officially formed a business structure with your state, the IRS sees you and your business as the same thing. Without a formal business structure, there's no legal wall between your personal and business finances. And you report all your income and expenses on your personal tax return. And you might not even have a separate business bank account to run your business. Now, this is actually okay, but it can cause some serious headaches when it comes to filing your taxes. So, simple question. How do you pay yourself as a sole proprietor? Whether everything is in one bank account or in separate business bank accounts, you're gonna end up taking what's called an owner's draw. If you don't have a separate bank account for business, you just spend money for personal expenses out of the existing account. Now, if you do have a separate bank account for business, you just transfer money from your business bank account to your personal account. You don't have to run a formal payroll to pay yourself. Now, you can run payroll as a sole proprietor if you have employees other than yourself. Now, owner's draws aren't deductions for your business, so they're not gonna reduce your profit. You're still gonna end up paying income tax and self-employment tax on your profits when you end up filing. Now, let's say you set up an LLC and you're the only owner. Now, this is a great move because it adds an extra layer of legal protection between yourself and your business. But unless you choose otherwise, the IRS is still gonna tax you like a sole proprietor. Now, how do you pay yourself as an LLC? Exact same way, through an owner's draw. Now, it's important to note, there's still no payroll needed to pay yourself, but you can run payroll if you have employees. Another perk is you can just move money from your business to your personal account, and you'll pay income and self-employment taxes on the business profits when tax time comes. But keep this in mind, just because it's your money doesn't mean you should take it all. Pay yourself what you need and keep the rest in the business, specifically to cover your business expenses and at the end of the year, your tax bill. Now, if you consider yourself a freelancer, you're most likely operating as a sole proprietor or a single member LLC. That means how you pay yourself usually comes down to one thing, an owner's draw. Now, here's where things change a lot. How to pay yourself as an S Corp. Now, if your business is taxed as an S corporation, you can still take owner's draws, but you're also required to pay yourself a formal salary through a payroll process. Now, here's exactly how you can pay yourself when you elect for S Corp status. Firstly, you're gonna wanna determine a reasonable salary. Now, the IRS doesn't necessarily have a formula for this, but you should consider similar salaries for your industry. Now, this goes into whether you work part-time or full-time and where you live. Secondly, your reasonable salary must run through a formal payroll process. This is easiest on a payroll software that will automate your tax withholdings and file your quarterly payroll tax returns. Failing to pay yourself a reasonable salary with an S Corp election can be a costly mistake. Now, the IRS can revoke your S Corp election and charge you self-employment tax on a salary that they choose for you. So here's the deal. Under an S Corp election, your income is going to be a mix of a couple different things. Firstly, W-2 wages. These go through payroll and get taxed like a regular job. Secondly, distributions. Now, these distributions aren't going to be subject to self-employment tax, and that's where the real tax savings kick in. So here's a really specific example. Let's say that your S Corp makes $100,000 in profit. You might pay yourself a $50,000 salary and give yourself a $50,000 distribution. Now the $50K in distributions, that avoids self-employment tax. And boom, you save thousands of dollars in taxes. But don't abuse it. If the IRS thinks your salary is too low, they're gonna end up knocking on your door. Now here's the problem, and it's a big one. Most business owners end up mixing personal and business finances. They swipe the same card for groceries and client expenses. Venmo, yourself, rent money, it all blends together. And that leads to only chaos. You end up not knowing what's yours and what belongs to the business. Tax season becomes a nightmare. Your accountant ends up hating you. You end up hating your accountant. And worst of all, you have absolutely no idea if your business is actually profitable. Now, what's the key mistake here? Commingling funds makes it a lot harder to track your pay versus your business expenses. Now, what's the solution for all of this? Paying yourself the right way, no matter your business type. This is exactly how to pay yourself the right way. Firstly, you're gonna wanna separate your accounts. If you don't already have a separate business bank account, stop watching this and go open one right now. Seriously. When your accounts are separate, you can clearly see what your business earns, what you're spending, and what you can actually pay yourself. It's the foundation for everything else. Secondly, you're gonna wanna figure out what your business structure is. How you pay yourself depends entirely on how your business is set up. Now, if you're a sole proprietor or a single member LLC, you're gonna pay yourself through an owner's draw. That means transferring money from your business bank account to your personal account. Absolutely no payroll needed. Just make sure that you're tracking it and saving for taxes. Now, if you're an S Corp, you'll need to run payroll and take distributions. Your business checking account will pay you a W-2 salary through payroll software, just like a regular job. Now, that paycheck gets deposited into your personal account, and it's exactly what you use for personal expenses. On top of that, you can also take distributions. Now, those are gonna be additional transfers from your business account on over to your personal account. But these aren't gonna be taxed the exact same way. And that's truly where the tax savings kick in. And thirdly, you're gonna wanna decide on a pay schedule. Pick a day to pay yourself, weekly, bi-weekly, or monthly. Treat this like a real paycheck. You have the flexibility to take additional draws when you need it. But having a tight schedule can build discipline and keep your finances a lot cleaner. Fourthly, know your numbers. Before you pay yourself, ask yourself a couple of questions. How much did the business make this month? Did I cover all my normal business expenses? What do I need to save for taxes? What's a responsible amount to take home? If you need a starting point to give yourself structure, consider a 50-30-20 allocation. 50% to pay yourself, 30% to cover taxes, and 20% to reinvest in the business. Hey, it's not perfect, but it gives you structure. Next, you're gonna wanna use payroll structure, and this is specifically for S Corps. Now, if you're running an S Corp, you have to pay yourself a formal salary. And this is to maintain your S Corp election. Tools like Gusto make it easy. They'll handle your withholdings, generate pay stubs. You'll still take distributions too. Just remember, your salary has to be reasonable based on your role, industry, and where you live. Now, when this is done right, this setup keeps you compliant, and it helps you save on self-employment taxes. Okay, now what happens when you get all of these things right? When you actually pay yourself on purpose, something crazy happens. You stop feeling like a hot mess with a business on fire. You know where your money's going, you're ready for tax season, you can actually plan for growth, and most importantly, you'll actually feel like a real boss. You can finally confidently say, this is my salary. Here's what my business profits are, and here's exactly what I reinvest. This gives you peace of mind. And if you ever want to apply for a mortgage, get a business loan, or sell your business entirely someday, having clean books and clear compensation is a non-negotiable. So let's recap. Here's exactly what you need to remember. If you're a sole proprietor or a single member LLC, you pay yourself with an owner's draw. You don't run a formal payroll for yourself. If you're an S Corp, you pay yourself a reasonable salary through payroll, and you take distributions. Now, if you're a freelancer, you're basically a sole proprietor. So same deal there. An owner's draw. Always keep your business and personal money separate, set a regular pay schedule cadence, track everything, and save for taxes. Whether you're a sole proprietor or an already elected S Corp, set up a real system. Trust me, your future self will thank you big time. Now, do you want to know how S Corp taxes actually work? Watch the next video on your screen. It'll save you thousands. And hey, thanks for watching. Be sure to like, comment, and subscribe, and let us know in the comments below. What are you curious about when it comes to S Corps and tax savings? We'll see you in the next video.